Hello everyone, and welcome back to the channel. Today, we're diving deep into Healthcare Triangle Incorporated, ticker HCTI. If you're interested in healthcare technology, cloud services, or just want to stay updated on a company that's pushing the boundaries in digital transformation for the healthcare industry, this video is for you. Over the next 18 minutes, we'll cover everything you need to know about HCTI, its business model, recent news, stock performance, financial health, insider and institutional activity, analyst outlooks, and what the future might hold for this innovative company. Let's start with an overview of Healthcare Triangle Incorporated. HCTI is a healthcare information technology company headquartered in Pleasanton, California. The company specializes in digital transformation solutions for the healthcare and life sciences industries, including managed services, cloud enablement, data analytics, and advanced AI-powered platforms. Their mission is to support hospitals, health systems, payers, pharmaceutical companies, and medical device manufacturers in improving health outcomes through better utilization of data and advanced technologies. Now, let's talk about recent news and developments. Healthcare Triangle has been making headlines for its contract wins and technology advancements. Most recently, the company secured approximately $1 million in new multi-year strategic contracts with major healthcare organizations, including a top-tier university medical system and the largest hospital system on the East Coast. These wins highlight HCTI's ability to deliver enterprise-scale digital transformation with speed and precision. In addition to these contracts, HCTI is significantly expanding its AI and electronic health record (EHR) integration services. The company is reinforcing its position as a trusted innovation partner for health systems across the country. One of its standout products is ReadABL.ai, a next-generation AI-powered SaaS platform that automates the processing of faxes, scanned forms, and unstructured clinical text, transforming them into structured, actionable data that seamlessly integrates with EHR systems. This solution has already delivered significant benefits for existing clients by automating document management and enhancing clinical decision-making. Let's look at stock performance. HCTI is listed on the Nasdaq under the ticker HCTI. The stock has experienced significant volatility, with a 52-week range from $0.0055 to $1.90 per share. As of recent trading, the stock price is hovering around 2 cents to 3 cents per share, with a market capitalization of approximately $8 to $12 million. The company's share price and market cap have fluctuated dramatically over the past year, reflecting both the challenges and opportunities of being a small-cap, technology-driven healthcare company. Trading volume has also been notable, with hundreds of millions of shares changing hands in recent periods. This high volume is typical for a penny stock and can indicate both high interest and high risk for investors. The stock's beta is negative, which suggests that it does not move in tandem with the broader market, something to keep in mind for those considering it as part of a diversified portfolio. Let's dig into the financials. For the most recent fiscal year, HCTI reported revenue of $11.7 million, a significant decrease from the previous year's $33.2 million, a drop of nearly 65%. The company reported a net loss of $5.97 million, which was actually an improvement over the prior year's loss, representing a 31% reduction in losses. The company's earnings per share, EPS, stands at -88 cents, and there is no dividend paid to shareholders. Despite the revenue decline, HCTI is making progress in reducing its losses and shifting toward a more sustainable business model. The company is focusing on expanding its recurring revenue streams through SaaS offerings like ReadABL.ai and strategic long-term contracts. This shift is aimed at improving margins, expanding its client base, and increasing enterprise value over time. Now, let's talk about insider and institutional activity. Insider ownership is relatively low, with individual insiders holding about 0.12% of the shares, and institutions holding around 0.44%. The vast majority of shares, over 99%, are held by the general public, which is common for small-cap companies. Institutional ownership is represented by well-known names such as Vanguard Group, BlackRock, Geode Capital Management, Citadel Advisors, and Millennium Management. However, their holdings are quite small in absolute terms, reflecting the company's microcap status. Monitoring changes in institutional ownership can provide insights into broader market sentiment and potential future movements in the stock price. What are analysts saying about Hcti? Currently, there is limited analyst coverage for Hcti, and no formal price targets or consensus ratings are available. This is typical for small-cap and microcap companies, as they often fly under the radar of major Wall Street firms. Investors interested in Hcti should be prepared to do their own research and closely monitor company announcements and financial reports. Let's talk about technical analysis and market sentiment. Given the stock's low price and high volatility, technical indicators can be less reliable for Hcti compared to larger, more stable companies. However, the stock's recent price action and trading volume suggest that it is highly speculative and subject to significant swings based on news and market sentiment. The negative beta indicates that Hcti does not follow the broader market trends, which can be both a risk and an opportunity for traders. Let's look at some of the risks and opportunities for Hcti. Risks. Revenue volatility. The company's revenue has declined sharply year over year, raising concerns about its ability to sustain operations. Profitability. Hcti is not yet profitable, and while losses are narrowing, the company still relies on external funding and contract wins to support its business. Market capitalization. With a market cap in the single-digit millions, Hcti is highly susceptible to price swings and liquidity issues. Strong partnerships. The company has strategic partnerships with leading public cloud providers, including Amazon Web Services, AWS, Google Cloud Platform, GCP, and Microsoft Azure, which enhances its credibility and market reach. Let's zoom out and look at the bigger picture. The healthcare technology sector is experiencing rapid growth, driven by increasing demand for digital transformation, data analytics, and AI-powered solutions. Hcti is well-positioned to benefit from these trends, thanks to its innovative platforms and strong industry partnerships. However, the company faces significant challenges, including revenue volatility, ongoing losses, and a highly competitive market. To wrap up, Healthcare Triangle Incorporated is a company with a lot of potential, but it's also facing significant challenges. The stock is highly volatile, and the company is still working to achieve sustainable profitability. However, recent contract wins, the expansion of AI and SaaS offerings, and strong industry partnerships give Hcti a solid foundation for future growth. As always, it's important to do your own research and consider your risk tolerance before making any investment decisions. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss our next update. Thanks for watching, and see you next time.